Today, June 16, we detected unusual options activity on Hewlett Packard, HPE. And so in this video, we will be analyzing these unusual options to determine whether this large investor is bullish or bearish. And so without further ado, let's get right to it. This all happened at 9:50 a.m. at the 37 mark here. You can see here, there's actually two. They're connected. They're the same trade. It was 3,000 of these July 21's 18 call strikes and 1,500 July 21 16 call strike. So keep in mind, this is a ratio, right? This is a 1-to-2 ratio here. And so when we take a look at this option chain, we'll see here that July 21 expires in 35 days. And so here we have the 16 strike calls, right? There are 6,000 that is open. So this is greater than the volume today. So these could be closing orders. The 18 strike calls here have 2,660. So this is less than the volume. And so these are opening orders. Now, what we think is still going on here is that they are still opening these 16 strikes, despite this, the fact that the open interest is greater than the volume. We also analyze other data as well, but we don't have time to go over every single bit of data. But that is why we believe that this is also an opening order. And by opening this trade here, by selling this 16 strike call, they're then buying the 18 strike calls. Okay. And so when you analyze this trade, you can see that this is a back ratio strategy. And what this is telling you is that if HPE, Hewlett Packard, at this current price of $17.63, if it crashes down, there will not be at a loss and they would get to keep their credit of $95. So anything above this zero line on the y-axis is profit. Anything below is a loss. So you'll see that the blue line and the purple line are all above this zero line here. And you'll also see that if the price increases substantially, these profit loss lines is also going to be above the purple and the blue. The only way they'll be losing money is whether this line is going to be this break even here. These two, you'll see this valley of death here. That's what they call it, is as this decays in time, then they could start losing money. But otherwise, at the initial period, you'll see that this purple line, which is this date here. The blue line is the expiration date, which is around July 21. But you'll see that the purple line, it does not really go below that zero line for the June 16th and the very near term. It'll only start to go below as we move in date, as it starts to expire because there's this theta decay, okay? And that break even starts to move higher where this trade has to go up significantly, or it has to crash significantly down in order for this trade to be profitable. And when we take a look at the charts, this does make sense because you can see here that HPE has been on a rally here and it is currently overbought, right? And it's actually showing a 9 over here. You can't see it, but there's a 9 here with the arrow pointing down here. This is the DeMark's 9 indicator, which indicates a potential trend reversal once that 9 is printed. And so today there was a 52-week high of 1775. This printed a 9, and there is this potential now with 2 technical indicators saying that it could come down, right? And so this sort of makes sense because this trade here is going to be profitable if it starts to pull back. And if this rally continues and this is continually bullish, this trade will also make money. And so if we zoom out some more to the 3-year mark, you can see here that this 1776, 74, we are at this resistance for a whole 3-year period over on this time period over here. This around February 2022, this was testing this strong resistance as well. And so since we've approached this, this trade is telling us that if we can break this resistance, then perhaps Hewlett Packard will be going significantly higher. And so that is why this trade was placed. And you'll see here, this is why this strategy was used despite the negative theta trade, all right? And so this is a trade where you have to manage it very quickly so that there isn't that loss with the theta. It's a very high theta for this type of a trade. This does have a $200 buying power because it's $2 wide. We are also in this trade. We like it, but it does require a lot of management. And so if this is something that you can handle and you can manage it well, then it is a profitable trade. It is a fast trade, something you want to adapt to as soon as possible, because you see here, this valley of death here will start diminishing the value of your options trade. So this price has to make a move very quickly in order for this to be profitable. If it stays in that range, it will start to decay in value and there will be a loss. Okay, so if this is something you wanted to trade and follow, that is up to you. We don't necessarily always follow the same unusual options activity. In fact, most of the time we do something different. But for this scenario, at the technical situation here, we feel like this is a pretty good trade here. And so we're taking it, and also because we have the experience to manage these trades too, because this requires a lot of adapting to the conditions. And so if you do want to learn more, we do have other stocks that we analyze, and also we have our trades that we show, and also how to manage trades as well in our membership program on our channel. So you can click the join button on our membership to learn more on how to join and what that entails. Different membership levels provides different exclusive videos on our trades or other closing trades or when to take profits. These are all very important to be overall profitable. Okay. All right. Hope this was helpful. And please, as usual, smash that like button. It really encourages us to make more videos. And if you haven't, subscribe and hit the bell icon, and you'll be notified whenever we detect unusual options activity. Thank you, and have a wonderful weekend.